Ladies and gentlemen, good day and welcome to Ujjivan Small Finance Bank Limited Q3 FY23 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arush Aratna from IIFL Securities Limited. Thank you, and over to you, sir.
Thank you to the participants for joining, and thanks to the management of Ujjivan Small Finance Bank for giving us the chance to host this call. From the management, we have Mr. Itra Davis, MD and Chief Executive Officer, Ms. Carol Furtado, Chief Business Officer, Mr. MD Ramesh Murthy, Chief Financial Officer, Mr. Martin PS, Chief Operating Officer, Mr. Ashish Goyal, Chief Credit Officer, Mr. Vibhas Chandra, Head of Microbanking, and Mr. Deepak Ketan, Head Financial Planning, Strategy and Investor Relations. I'd now like to hand over the call to the management for their opening comments, post which we can go on to Q&A. Thank you.
Thank you. Good evening and welcome to our Q3 Financial Year 23 earnings call. It gives me immense pleasure to share with you that we just turned 6. This is our 6th anniversary. It is an important milestone for us because today we serve 7.3 million customers through 607 branches and an employee strength of 17,000. These 6 years have been a mixed bag of learnings and achievements in our journey towards becoming a leading mass market bank. Q3 has been another good quarter for Ujjivan as it marks more than 12 months of being profitable after a rough patch. Another update is RBI extending my tenure as MD. During this period of the extension, the board would identify potential candidates and they would work with me for a smooth transition to take the Ujjivan journey forward. Coming to our Q3 performance, it was an all-round performance with strong disbursements, gross loan book growth and an even better deposit growth. Collection continues to be good and credit quality has improved further. This quarter, even post-implementation of the new credit MFI norms, we dispersed 4,838 crores and almost another record from the previous quarter. The system took a little while to settle down with the new norms, but now all is back to normal. In fact, December 22 was the highest ever monthly disbursement for Ujjivan. Our gross loan books grew 5% sequentially to 21,895 crores after total write-off of 179 crores. While overall all asset businesses performed well, you would have noticed a small decline in the MSE book. This is in line with what we have been mentioning since the last 2 calls, that we are adjusting our strategy there and will see growth once all changes are in place and systems are also upgraded for that. Asset growth was outpaced by the growth of our deposits, which grew at 14% sequentially, registering the highest ever quarterly inflow of 2,806 crores. Growth in deposits is in line with our guidance of reducing the CD ratio and bringing it closer to 80%, in line with the rest of the banking industry. Our retail deposits grew 15% sequentially and CASA grew 10% sequentially in a market where most banks are witnessing negative CASA growth. I believe this underlines our efforts towards building a granular liability franchise. On the asset quality, our collection efficiency continues to be around 100%, taking our PAR further down to 4.9% from 6.1 as of September 22. If you look for year-on-year improvement, it is around 1,000 basis points. As of December 22, our GNPA is at 3.4% and NNPA is just 0.05%. Also, our SMA book as well as restructured book have shrunk further, indicating the reduced stress The restructured book is now just 302 crores, with collections almost in line with the overall book. On profitability side, our pre-provision operating profit stands at 389 crores with a PAT of 293 crores. NIM for this quarter was 9.4%. For the 9-month period, our pre-provision operating profit stands at 1,074 crores with a profit after tax of 790 crores with a net interest margin of 9.6%. We expect Q4 23 to be similar to Q3 23. Now an update on the merger with UFSL. As per the update published by SEBI on their website, basis our submission of scheme documents with the exchanges, the NOCs have been received from both the BSE and NSE on January 6th, and SEBI is in the process of seeking clarification from other regulatory bodies. Further, Reserve Bank of India has given its notice to our application, which was uploaded on the exchanges last night. Once we are in receipt of the SEBI clearance, we will proceed to file the application with the NCLT. On submission of our application with NCLT and on receipt of their requisite regulatory and shareholders approval, we will positively expect to get the proposed merger completed by September this year. Now, just a little bit on the outlook for the year ahead and for the fourth quarter. Going ahead, we will be growing our presence both physically and digitally. In Q3, we added 8 branches, marking our foray into the new state Telangana. As of today, we have 606 branches. In fact, 607, we have just opened one today and are looking to add more this quarter. Financial year 24 branch addition would be close to between 50 and 70. Focus is to expand in deposit-rich catchment areas. In addition, as we have always maintained, we would look to add multiple connect points with our customers using technology as an enabler. Our digital initiatives are towards direct acquisition of liability and asset customers, fintech partnerships, focus on our IBMB platform to generate more business. Our Hello Ujjivan mobile app is the step in that direction. This has already had 60,000 downloads within a month. With this app, we wish to increase digital penetration among our mass market customers and inculcate a banking habit. Also, we wish to capitalize this asset to disperse MFI loans with very limited human intervention and focus on digital collections as well. The process would be tedious and gradual but has high potential of benefits like improved collection, productivity and reduced OPEX. We also look forward to automate the processes and use RPAs to improve productivity and service quality. With our digital taking shape, we are also working on shifting customers to cashless alternatives. During FY23, we have invested on our digital capabilities like video banking, KYC, access management and others. These would also help us in our digital journey. Microbanking continues to be well backed by strong credit demand. While we did see some hiccups in process due to implementation of the new MFI credit norms, but that has all settled down now and we are seeing good disbursements. We continue to invest in the business and look to newer avenues like QR code, cashless collection, DC partnerships and others. The micro and small enterprises, we are currently in a transition phase and investing in expanding our product suites and services to be more relevant to the semi-formal and formal segment. Also, we are upgrading our technology platform to serve the customers better. The other businesses that we have, one is housing. We are pleased to say that we have crossed the 3,000 crore OSP this year for housing. Incrementally, we are focusing on semi-formal in Tier 2 and Tier 3 towns. We implemented a state-wise collateral policy. an ROI matrix, and recently an increased productivity. Consequently, the business has turned profitable, and we have now opened a couple of new asset centers as well, where housing will be operating out of these centers. Vehicle finance, our IT integration is in place. We look to scale up the business in the coming year once this is fully operational. Currently, we are doing limited business, majorly with ETB MFI customers. Now, we are looking to focus on the new-to-bank customers as well. Among other secured businesses, we are looking to scale up our gold loan business once the test marketing is completed, and this will be done commercially across 50 branches. Also, our NBFC lending business is doing well with nil delinquencies. We are focusing on our fee income with addition of new products like 3-in-1 account, NPS and mutual fund in FY24. We are confident that the new initiatives will start materializing in the second half of 24, one by one, and you will see this impact. Overall, we expect to grow our gross loan book by about 25% in FY24. Given increase in cost of funds, there would be some pressure on NIMs, which we would need to manage by focusing on increasing CASA, especially the CA part of it, through yield expansion. While we would continue to invest in the tech and digital platforms as well as brand visibility, we would keep cost-income ratio under control. FY23 has been an abnormal year in terms of credit cost. Abnormal, what I mean is very good year in terms of credit costs. Next year, we expect provisions to move up towards 1% on average gross loan book and recoveries. Though significant, this would be lower than financial year 23. We would be able to share more details once we close the financial year. Dynamic macroeconomic and geopolitical factors, along with inflation and rate scenario, would be key monitorable items. However, given our business model and investment in various banking platforms, we are confident of a strong Q4 and a good fiscal 2024. I'd like to stop here and request the operator to begin with Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. First question is from the line of Renish Harishbhai Bhua from ICICI Securities. Please go ahead.
Yeah, hi sir, and congratulations on great set of numbers. So sir, just two questions. One on the, the deposit side. Though the absolute deposit acquisition has been robust in the quarter, but when we look at the customer acquisition run rate, which is roughly around 3 lakhs per quarter, so that has actually declined this quarter. So can you please throw some light on what is happening there in terms of the customer acquisition? Is there any particular channel, let's say, digital or any particular geography, which is, under pressure, which is leading to the lower customer acquisition?
Hi, this is Carol. Thank you for your question. So what we are doing currently is that we are focusing a lot more on the quality acquisition than over quantity, and increasing the acquisition of higher ATS customers, and that's the reason why you see a slight dip there. But this is just a one-off, and we will be increasing our customer acquisition.
Got it. Thank you on that. So my second question is on the asset strategy side. So if we look at the last 3-4 quarters trend in terms of the AUM mix, the share of MFI has been going up steadily, which is in contrast to what we have been stated in our SSP journey of improving this asset mix. So sir, what would be the strategy going into 24-25 in terms of the AUM mix?
Yeah, I mean, that's a good question. I think, we have outlined our longer term strategy, which is to build a balance 50-50 between secured and unsecured. As I just mentioned, we are developing several of our secured products, which will be launched, into the market next year. That will help us. And we are also growing our secured housing and MSE portfolios. There are some system changes which are taking place right now, which will help us to, grow these portfolios faster. So in the short run, what has happened is that post-COVID, we were more prepared with the microbanking business as a overall to come out of COVID. So that is why it has grown faster. But eventually, the other businesses, the secured portfolios will have to catch up and overtake in terms of rate of growth. But, microbanking will continue to be an important part of our portfolio. And as I said, eventually in 5 years or thereabouts, we are looking at a 50-50 breakup between secured and unsecured assets.
Also, Renish, in the interim, as Mr. Davis mentioned that the microbanking portfolio is doing much better, we also need to see that the microbanking portfolio is much more profitable also in giving us that kind of income that is required for the business to invest in all other businesses that we have.
Got it. So just the last follow-up on the deposit side. What is the deposit rate hike we have taken, let's say, during the last 3-4 months?
Come again, Renish. Which rate hike are you talking about?
Deposit rates, TD rates.
So we have not taken any TD rate hike after November. The last we took was November, and after that market has seen a decent amount of rate hike and we have not been taking rate hikes. We are still seeing very good flow on our liquidity side, our deposit intake. We just mentioned, Mr. Davis mentioned in his speech also, this quarter was very good in terms of overall deposit inflow. In fact, we got 2,800 crore of deposit inflow. And January too, we saw a very good amount of deposit inflow. So we haven't taken rate hike, and as of now, we feel comfortable with where we stand today.
Oh, so okay. So despite the not taking the rate hike, we are seeing the incremental flows to be much higher. Fantastic. Thank you.
So we took the rate hike in November, but we are happy with that hike. We are not chasing to look at any more hikes in the near term. So we will watch the market, but what we did in November was adequate for us.
Got it. Because in December, January, actually, the rate hike gathered pace. So I was just wondering, we have not yet taken that rate hike, and despite that, we are able to garner this one before. Okay.
Yeah, we have not participated in that chase of December, January. So whatever we did in November has helped us get the deposit rate going, deposit garnering going.
Got it. That's it from my side. Thank you.
Thank you. The next question is from the line of Shripal Doshi from Equirus. Please go ahead.
Hello, sir. Good evening, and thank you for giving me the opportunity. And congrats for the good set of numbers. So the first question was for the individual loan category, micro individual loan category. So wanted to understand is it only focused towards captive customers, captive JLG customers? And secondly, after how many cycles of, being in the JLG cycle, do we shift the JLG customer to micro individual category?
So hi, thank you for the question. Individual loan is something which we offer to our customers after completion of one GL cycle. But largely we have seen that customers opt for individual lending generally after 2 or 3 cycles. This is answer to your first question. Second is
90%.
Yeah.
90% of our customers in individual loans are the ones who graduate from the group loans.
It's existing customers.
Largely they are existing customers.
So we have product for both active customers as well as open market customer acquisition. But we have largely focused on our internal customers as we have a large customer base. So more than close to 95% customer acquisition happens through graduation of GL customers.
Okay, got it. And sir, how is the process for this? Like, the disbursements and collections for this happens through the same channel, or do we have a separate separate channel or separate channel for this particular business?
Yes. So yeah, the entire acquisition process for individual lending is something which is very old in Ujjivan. We have been doing our individual lending business for last about 12 years, and processes and the product and processes set as far as Ujjivan is concerned. The entire acquisition process and collection process is separate from group loan business. The customers who graduate to IL, the underwriting mechanism is very, very different, which is there in group loan. And apart from that, we have completely independent credit team right from the field to the top, which has no relationship with the business team. And the credit team decides upon ticket size and customer acquisition of individual lending customers. As far as repayment is concerned, we offer different mediums and different channels for repayment, including UPI payment, SI payment, ACH payment, and all other digital mediums which is possible for our customers to use. Apart from that, they are also welcome to center meetings as well as our branches for repayment.
Okay, but sir, here the model will be monthly, right? They will be paying monthly EMI sort of a model, right?
We offer frequencies, but generally we have seen both in group loan as well as individual lending, customers generally opt for monthly as it is convenient.
Got it. So the second question was with respect to the MFI book only. So once a customer has defaulted and we've written him off from the book, how much of the cooling time do we give to the customer that we can again sort of bring him on board? Or so do we have a strategy there, or do we have a line of action there? Once we have written off a customer, can we again onboard him after 6 months or 12 months of a time period?
Shripal, we have consciously not taken on board any customers whom we have written on in the past. So they are not in the qualifying list for acquisition.
Even if it has been written off by somebody else, so even in that case we don't onboard such a customer?
Yes.
Got it. So the third question was, we acquired 2.3 lakh new customers during this quarter. So what percentage of them were new to credit customer for us?
So approximately 60-40. 60% are customers who've had tracks with the industry, and about 40% are new to credit.
Okay, and so during this quarter disbursements, so in the MFI piece, what were to the existing customers and what were to the new customers? Like what percentage?
So about 35 to 40% is disbursements to new customers, the NCA, and between 65 to 70% are existing Ujjivan customers.
Got it. So the last question was, if you could give details of the movement of NPA, that is, what was the gross slippage, recoveries, upgrades, or write-off you already given in the filing?
So on upgrade for the quarter, it was about 197 crores, which is about 10% of the gross NPA that we were carrying. And the slippages was about 0.5%.
Okay. Got it, sir. Thank you, sir. And good luck for the next quarter, sir. I'll come in the queue if I have more questions. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Gautam Jain from GCJ Financial Advisors. Please go ahead.
Good evening, sir.
Good evening.
Yeah, my first question pertains to your caseless collection, which is rising every quarter. So can you throw some light on it? What is it leading to such a high or increase in caseless collection? And what any target we have in mind that we can reach to that level? Just your thought on that.
Yeah, so it all started during pandemic. Before pandemic also we were trying, but pandemic was a time when even customers started to learn, and we also learned that we have to provide different channels of repayment, as during pandemic Even we were not able to move into the field and for the collection. So during the pandemic, we developed various channels, digital channels through which customers can repay their EMI. And so take example of all the wallets, UPI payment, SI, ACH. These all models we established during pandemic, and customers also adapted, and we saw a huge jump in cashless repayment from the customers. Looking at the success, we have also developed a mobile application especially dedicated for micro banking customer segment, which we call Hello Ujjivan, where customers can use it conveniently and to repay our EMI and do many other things as far as banking is concerned. So today, about 26% customers pay us digitally. This not only is convenient for our customers, but at the same time it reduces your OPEX as well. As far as long-term numbers are concerned, we are looking at the milestone of 30%. But the data which is available in the market, that says that close to 40 to 45% customers at this point of time have smartphones, and we are targeting these customers in the next financial year, and this number will gradually increase. So we are looking at gathering more and more customers into the digital repayment, so that entire process of collections becomes much more inexpensive.
And which channel they use the most? I mean, Google Pay, GPay, or I mean.
UPI is the first, and followed by SI and ACH.
Okay. And my second question is, Mr. David has talked about FY24 to be a good year and credit cost to be around 1%. Can you also guide about what growth we would like to have in 2024 and what kind of cost to income ratio we want to achieve next year?
Gautam bhai will come to that when we, as Mr. Davis mentioned, towards the close of the fiscal. Right now we can say that the broad growth guidance will be 25% and credit cost would be around 1%. And we will keep a good tab on the cost to income ratio. This year, 9 months is around 55%. Probably we will be around that range only when we close the year, more or less. We will keep a very strong tab on the cost to income ratio. We will not want that to go up from where we are.
Thank you, Mr. Jain. May we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Shailesh Kanani from Centrum Broking. Please go ahead.
Congratulations, sir, on a good set of numbers, and thanks for the opportunity. So my question is with respect to competitive landscape on the industry side. Are we facing any competition, or are there any pressure on yields?
Overall, in the for industry-wise, there is a lot of banks. What we are seeing is there's a lot of pass-on that most of the banks are doing in terms of the interest rate hikes. In fact, we have not been doing that. For example, in micro banking, while peers have passed on a lot of rate hike, we have only taken a 50 bips rate hike so far. Even in housing, like Mr. Davis mentioned, it is linked to EBLR. The increased rate that we have done for the new disbursement is around 90 to 100 bips. We have not passed on yet. So we still have that up our sleeve that we will be able to do a little bit of a rate hike, and that's what he mentioned in his speech also, that for whatever cost of fund hike is there, we'll have to see how we increase our yields going ahead.
We are not passing on as of now, but as you mentioned,
we feel comfortable where we are, and we keep that as a buffer in our hands.
We are closely monitoring the situation, and we will take the calls at the right time, because right now we are in a comfortable situation.
With respect to deposits as well, as we have increased and we have seen good deposit growth.
Audio is breaking from your line. Please repeat your question.
Yeah. So I was asking the same thing on TD rates on deposit side as well. Since we are seeing good growth, we are not seeing any pressure on that as well, right?
Not at the moment. We are able to hold on to the rates.
Okay, sir. And so one last question. We are entering into new geographies. So can you just outline some strategy on that, or how we approach to a new state, the credit culture over there, and what is our basic premise of entering into a new state?
Okay, so we recently entered Telangana, and we went ahead with the liabilities front. Our branches are more into retail liabilities. We will also be setting up the housing and the MSE teams out there. We are seeing a very good garnering of deposits happening in Telangana. We've opened 4 branches at the moment.
Thank you. Mr. Kanani, may we request that you return to the question queue for follow-up questions. The next question is from the line of Sharaj from Laburnum Capital. Please go ahead.
Hello, sir. Thanks for the opportunity. My question is on the SMEs, MSE lending side. What is the new strategy we are taking? And we've tried this a couple of times, but we've not been successful. So what is our right to win here this time, and what are we targeting?
MSE strategy. So on the MSE side, yes, I mean, we did speak about revising our strategy. We will be focusing a lot on the shorter tenor products in the strategy going forward, and also our customer segment would move towards the semi-formal and the formal segment. So this is something that we are working on, and also we have launched the product called the Prime Lab for our customer segments for the longer term loans. And this would be facilitated also to a large extent through our growth in fintech partnerships.
So what would be a right to win here is what I'm trying to understand. Essentially, I mean, it's a new customer segment we're going after, new market entirely. So like, what is it that we'll be able, what is it that makes you think that we'll be able to succeed here? Like, what is it that we'll be doing differently? Like,
I didn't get your question.
Sorry, could you just repeat? It was not clear.
Yeah, sorry. The entire market segment, as in the customer profile, the business is going to be different now, right? So what is it that will give us our edge here to succeed?
So we have always been in the semi-formal segment, but we are going to focus a lot more in the semi-formal segment. We have moved out of the informal segment. Our USP would continue to be customer service, and technology would play a very important role for these customers.
Okay, and in the ticket size you mentioned this time for the MSE lending, it's gone up from 20 lakhs to 40 lakhs, and apparently it's the fintech lending. So what is the difference here?
So the fintech lending was short-term bill discounting kind of product, where the ticket sizes were very small and the tenors were also very short. So since we have discontinued that product for the time being, the difference is there. Our core lending book, the ticket sizes have not moved up significantly.
Thank you, Mr. Swaraj. May we request that you return to the question queue for follow-up questions. The next question is from the line of Deepak Thakran from 1729 Advisors. Please go ahead. Mr. Thakran, your line is in talk mode. Please go ahead with your question. Mr. Thakran, please unmute your line from your side if muted. As there is no response from the current participant, we'll move on to the next question from the line of Ashlesh Sonje from Kotak Securities. Please go ahead.
Hi team, congratulations. A couple of questions from my side. Firstly, on the deposit front, we have seen quite robust growth there, both on the savings account as well as retail term deposits. And I believe the TD rate has been increased by only about 40 basis points since September. So what exactly has worked for us in terms of our strategy to garner deposits here? If you can elaborate on that, please.
So I think what has worked for us is, of course, the interest rates. But I think this has also been supplemented with our customer service, where we have been able to provide relationship banking services to our customers, getting a lot more granular, and also we have seen the digital working well for us. We have also introduced the cash management, QR, and we have taken in a lot of efforts to increase the marketing activities in the local areas of our branches. And we have done two major all India marketing activities on newspapers, press, TV. That has got us a lot of customer leads. And on the other side, we've also worked a lot on increasing the productivity of our staff. And this has also, again, we have done very thorough workshops with our branch managers and training to our sales teams. All these put together, I guess, has increased the deposit base.
You might have seen us also in the New Zealand match yesterday on advertising. We are all over the place now, so branding has become very important.
Okay, good to know, sir. Sir, would you say we would have added more to the sales staff on the liability side during the quarter?
Not increased our sales staff.
Okay.
If you see, our overall employee count has not gone up significantly, so not much of addition has been there.
In fact, it has gone down.
Perfect. Thanks, ma'am. Second question is on the...
We would be adding a bit now with the new branches, and even in the existing branches we have identified few branches which have much larger potential. So there we would be adding, and you will see the benefit of that coming in.
Okay, thanks, Deepak. And secondly, on the individual loan book within MFI, can you talk about the range of ticket sizes that we offer and the tenors offered in that segment?
So our range is 51,000 to 3 lakh, and it depends upon how many cycles customers are with us in GL and in IL as well. As far as their average ticket size is concerned, all the customers that we have lent, it is close to 1.2 lakh. And here are the two questions you had.
Tenor.
Tenor is no, because we are now moving. We also offer customers tenor up to 3 years as well, which is maximum. Our average tenor is close to 26 months.
Okay, perfect. Thanks. Sorry, and if I may just squeeze in one last question on the slippages front, can you clarify what the actual slippage number was in rupee terms, and what is the way for accounting slippages? So let's say a loan slips into NP in the month of October, but recovers in the same quarter, let's say in the month of November. Would that be counted as a slippage the way you report it?
So our overall slippage number was 110 crores. This was net slippages. So there is an upgrade also which gets reported in the same quarter. So slippages and upgrades are netted off. So overall, I would say that the net slippage was about 14 crores for the quarter.
Okay, perfect. Thank you.
Thanks. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Hi, Deepak.
Yeah. Hello, sir. Congratulations for a good set of numbers, sir. So just wanted to understand just one question I have. So in terms of rate hike, you mentioned since November we have not done any kind of rate hike, right? And this last cycle we have not participated, right? So any plans for further rate hike that might be on the cards? So any thought process would be helpful.
Not at the moment, but then we are closely watching the situation, and we will take the calls as and when it is required.
Because you did say that next year we are expecting some pressure on NIMs, right? So
yeah, I just want to add. See, the thing is that when we did make the rate hike, we did a good rate hike that we didn't have to keep adjusting 20-30 basis points here and there. So we realized the cycle in which, or the rate at which the markets and interest rates were moving, and we took a bold step in November, and we have held on to that. Now, going forward, if the central bank or the Reserve Bank of India continues to increase rates, then we have to watch that very carefully. So we are watching, and we will do what it requires to keep us in the forefront of the deposit growth. So NIMs, yes, when NIMs are being squeezed, we also have to look at the lending side. And as I said, there is a potential that if the RBI raises interest rates, we may look at having to raise the lending rates as well. Because the lending rates on the microbanking book, we have raised only once in September by 50 basis points, and we have not done anything else after that. So we have an opportunity to see if the rates go up, and continue to go up. We may have to raise the lending rates as well.
Fair enough. Understood. And in terms of pressure on NIMs, so what sort of basis point would be comfortable with? I mean, in terms of NIMs compression, if at all next year we can see. I mean, what the 20-25 basis point would that be comfortable for us to kind of absorb and not go for the rate hike?
Deepak will talk about more financial data about next year when we come back in the fourth quarter. Also, one more thing I like to add on the rate hike on the TD side. Our liquidity currently is quite good, and we believe we are quite well placed for this quarter disbursement, even for the fourth quarter, which is generally expected to be a little higher compared to the other quarter. So we'll see how and what kind of rate hike is required.
Thank you, Mr. Poddar. May we request that you return to the question queue for follow-up questions. The next question is from the line of Deepak Thakran from 1729 Advisors. Please go ahead. Mr. Deepak Thakran, your line is in talk. Please go ahead.
Hello, can you hear me?
Yeah, Deepak, hi.
Hi, this is Sanjay Pandit here from 1729. Just a quick question, and that is, what is your sort of run rate long-term?
The audio is breaking from your line. Please check.
Sorry, I have one question. What is your long-term return on assets or return on equity estimate / target as you look at your business across 5 years? And the second question is, by when do you think the reverse merger with Ujjivan Financial will be completed?
Deepak, on the longer term ROA, sustainable ROA, is that what you are asking for? We believe in this kind of a business, a 2.25 to 2.5% kind of a sustainable ROA is easily manageable. And and with a few years being exception, like current year was a good year for as an exception. So we are having that 4% kind of a return. And ROE is largely a factor of your what kind of capital adequacy you are maintaining. So given this year was this year is after a rough patch, so we are maintaining a high capital adequacy. This wouldn't be the case, so our ROEs will accordingly adjust as the capital adequacy move. Industry-wise, I think the capital adequacy for SFBs is around 20%, 20 to 22%. On your reverse merger question, we have mentioned in our press release also, and Mr. Davis covered in his speech also, that we are awaiting a SEBI approval on the application that we have made, and then we will move to NCLT. With all the other regulatory approvals and all, we expect the process to close by September 23.
Thank you very much. And congrats on a good quarter.
Thank you, Deepak.
Thank you. The next question is from the line of Bhuvnesh Garg from Investec Capital. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Sir, would like to know what would be the number of active customers in group loans and how it has moved in last 3-4 quarters.
So our active micro banking customer, which I have offhand, is around 34 lakhs, and it is up 25% YTD.
25% YTD. Oh, 34. Okay. That's it from my side. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Yash Dantewadia from Dante Equity. Please go ahead.
Hi, sir. Good evening. So my first question is regarding the floating provision. When are you planning to write back the amount to our book, and what's the thought process behind this provision now? Because COVID is done, I think. So I want to understand this first.
Yeah. Hi, this is Ramesh Murthy here. Floating provision is governed by RBI norms here. So it really depends on when Reserve Bank of India allows us to take a call on floating provision. We have represented this matter to Reserve Bank of India, and we are waiting for a response. So we have to just wait till RBI comes back to us, because this is under a regulatory guideline.
Okay. And my second question is, your H2 guidance was similar to H1 guidance, which was 500 crore. Would you like to upgrade this guidance to maybe 600 crore now because of how the quarter 3 went?
We just mentioned Q4 would be more or less similar to Q3 in our speech, opening remarks.
So if you want to move,
H2 guidance would be 600, right?
300 is okay.
Also, what's
one more thing on the floating provision? It's good to have a little bit of a floating provision, a little bit of extra cushion on your balance sheet.
So my last question is regarding the secured and unsecured book ratio. You said you want to take it towards 50-50. By when do you see this happening?
Yeah, we have a broad timeline for about 5 years. Within 5 years, we'd like to see this there. So from the next financial year, you will start seeing the unsecured book coming down a little bit at a time till it reaches 50-50. So when I say 5 years, I'm talking about 28, 29 in that range.
Thank you so much for your time.
Thank you. Ladies and gentlemen, we will take last few questions. The next question is from the line of Ayush Vimal from Clearview Capital. Please go ahead.
Thanks for taking my question. Mr. Davis suggested that the share of secured book will actually go up from 28% to 50% over the next 5-6 years. I just wanted to understand the impact of this on the NIM over the long term and the return on assets.
Yeah, definitely the pricing on the secured book is lower than the microbanking book. But, we hope that credit quality and other aspects will also enhance the longer term return on assets will be around the 2-2.5%, which is what we expect. And and also the return on equity will have to be in line with what we are expecting from the market for this sort of thing. But the main thing is that we build a balanced book, and the risk is more, mitigated through this process.
Thank you. And the next question I had was on the strategy that you will be entering the gold loan segment sometime next year to shore up a secured book. Given that this segment is under intense competition at present, and there's a lot of yield compression with banks entering the space. Just wanted to understand the rationale for entering the segment at this point in time.
Gold loan is, first thing is that we have entered into gold loan market. We have launched it in some branches and we are testing. And we intend to, start operation in about close to 50 branches next financial year. You are right that the competition is intense in gold loan, but at the same time, we see that among our microbanking customers, the overlap with the gold loan is close to 10 to 11%, and that is a huge number. And we see that our customer is in demand of gold loan, and because we are giving him loan, we are also trying to offer them gold loan. Apart from microbanking loan, we have other customers also in the branches, including branch banking, MSA, and housing. There also we see demand, and looking at the customer demand with a in-depth survey with the customers and even open market customers, we decided to enter into gold loan market business. This will allow customers to take one-stop shop kind of solution where they can get all kind of loans that they need from us. At the same time, it will also help us increase our secure loan portfolio, which we target to reach 50/50 by in next 5 years.
And in addition, we will be launching this product in identified geographies where we believe that it makes sense for us.
Thank you, Mr. Vimal. May we request that you return to the question queue for follow-up questions. The next question is from the line of Sarvesh Gupta from Maximal Capitals. Please go ahead.
Most of my queries are answered. Just one thing, like this quarter we had a QOQ growth, but somehow, the other expenses sort of made us not grow the pre-provision operating profit. So are there any one-offs related to the tech or some other initiatives that we have taken which are expected to taper off in the coming quarters, or this is business as usual?
You're talking about other OPEX, right?
Yeah, I mean, you did grow your book on a quarter-to-quarter basis, but your pre-provision operating profit did not grow. So, are there any one-offs related to the expenses also in the P&L, which are starting to sort of build up?
One thing that was there last quarter was a PSL income of around 14 crore, which is not there this quarter. PSL income doesn't come every quarter. It comes like in blocks when we sell the certificates and take that income. So last quarter that income was there. This quarter that income is not there. To some extent the finance cost has gone up because of the rising interest rate, as you have been listening on the call. Other OPEX, there have been a little bit of a marketing spend that we have done, little bit of an investment that has gone in. For example, Mr. Davis mentioned in his speech also, like one of the revenue on the micro banking side is QR code. So little bit of investment is gone there. So all those investment, a little bit of branding and all that has put that other OPEX at 217. Other than that, there is no one-off item in the other OPEX. But yes, on the income side, that income is not there versus Q on Q if you are comparing.
Understood. And this long-term ROA sort of a thing that you're looking in the range of 2-2.5% seems to be pretty low compared to where we are already at 4.5% because it would mean essentially that even if you are going to double your asset book in 3 years, perhaps with 25% growth, you will still be at the same level of profit after tax or something like that. So is that a overly conservative guidance or what is leading to this sort of a number?
So what we said is a sustainable ROA. The question was the sustainable ROA in this kind of a business. This year, as you are aware, the credit cost is almost negligible and the bad debt recoveries are quite high. That has increased or that has skewed the ROA this year towards on a higher side. But a long-term sustainable with all the changes that we are talking about, the ROA sustainable should be around 2.5.
Understood. And what kind of cost to income that you are targeting? Any guidance on that?
Will come with more detailed numbers when we come towards the end of the quarter, end of the fiscal.
Understood. Thank you and all the best.
Thanks.
Thank you. The next question is from the line of Vivek Gautam from GS Investments. Please go ahead.
Yeah, congratulations on this set of numbers, sir. Basically, it's more of a macro question, sir, because after giving very good numbers post listing and somehow when in the bad phase, our good performance could not sustain. So besides COVID, what were the factors which were there and what have been the key learnings and how sustainable is our business now and any concerns we still have?
Sorry, we couldn't follow your question. There's a little bit of a background noise.
Basically, the question was that our company
Mr. Gautam, the audio is breaking from your line. Please check.
Hello, is it okay now?
Yes, sir.
Hello? Hello?
Yeah, this is better.
Yeah. Just wanted to understand the reasons behind the improved performance of late, and is it sustainable, particularly in view of the we went through a bad patch post-COVID. COVID was one of the major reasons. What were the other reasons, sir?
Yeah, the bad patch that we went through in fiscal year 21-22 was primarily due to COVID, because we recognized, many of our customers were affected by the COVID conditions, and we had to recognize and make provisions for that. So that was what we did, and followed all the accounting and RBI guidelines on that front. Now that is behind us. We are turning around, and this year we have had fantastic recoveries. Our collection team and our credit team have worked extensively with our customers, and what we are seeing is perhaps second to none in the industry, at least definitely in the small SFB space. So I think that is helping us. Now, this is a very unique situation, and when we come to a more normal environment next financial year and beyond, the things will be different, and we will be operating at a normal thing, not at current levels of profitability. It will come more normal profitability. But we expect the business to continue to do well and go back to what we were doing pre-COVID days in terms of how we were operating at that time. Our profitability was good, and the business was doing well. So I think when we get back to normal conditions, that is what we are aiming for.
Okay, sir. Thanks a lot. And sir, one more thing, sir. In the current rising interest rate scenario, how will be our performance be and what can be the impact on the credit growth, sir?
The interest rate environment, so far we are not seeing a problem with loan growth, and that I think is not just us, the whole industry is continuing to see, because we are coming out of COVID and there is a demand for credit. So I think that will continue into next year as well. Now, if interest rates continue to remain high throughout next year, then we'll have to see how to address that situation. But the whole industry is expecting a turnaround or a decline in interest rate to start sometime in the second half of the financial year, definitely. So once that happens, I think the credit demand will continue to be sustained.
Thank you. Ladies and gentlemen, we'll take the last question from the line of Tushar Sarda from Athena Investments. Please go ahead.
Yeah, thank you for the opportunity. I just wanted to understand your normalized profit. So you've got PPOP of 389 crore this year, which has 30 crore miscellaneous income or bad debt recovery, which I assume will not recur in a normal year, right?
So, we have had some...
a lot of NPS, so it may continue for a year or so, but after that it will taper off. Is that assumption correct?
True, that's right. So bad debt recovery is something because we had a lot of bad debt accumulation last year. So the recovery process and our investment into the collections infrastructure has given us some very good result this year. But over a period of next 4 to 6 quarters, obviously this number is not going to sustain.
And you will have credit costs coming in, you're guiding for 100 basis points on the gross loan book.
That is right. That is right.
Okay. And what will be the tax rate? One should assume 25%?
Yes. Yeah. Yes.
Okay. That's it from my side. Thank you very much, and congratulations on a superb set of performance.
Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Well, thank you very much. I appreciate the time all of you have taken to join us and participate in this discussion and conference. I'd like to thank our partners, IIFL, for organizing this and appreciate the support that they're giving us. Thank you very much and have a good evening.
Thank you. Ladies and gentlemen, on behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.